I would probably say I'm leaning short on the equity markets. So right now, because I think I think the upside downside just doesn't make sense to me when I have so many people telling me, so many central banks telling me what they're going to do, what they want to do, what they expect to do.
Let's get down to the New York Stock Exchange. I've been doing some math, Jim. Do you have an S&P? Do you have a high confidence in what your S&P earnings number is for 2023? And then
No, I haven't put it together. I mean, mostly dealing with individual companies, trying to add them up from the bottom up, which is hard because there's, obviously 500 of them. But I listen to Dave, and I think, as Dave said, it is what it is. And the central banks, like Christine Lagarde, we didn't pay enough attention to her. She wants things up. Japan wants things up. We want things up. But the one where I disagree with them is that even though the number for the GDP was revised up, I'm starting to see price increases across the board in a lot of different areas. We get used cars today, CarMax. There's different foodstuffs that are going down in price. Automobile going down in price for new cars, too. So I just, housing down 7%, that the Fed's winning. And I think that was left out of what Dave said. I mean, he presumes, I think, that the Fed can't win. And I think that the Fed is winning.
I hope so. I've always hoped for that. And that would mean, Jim, that maybe some of the so-called markets not listening to what the Fed's going to do. Maybe the markets are responding to what they know about what you were just talking about. Maybe it's not that the markets are stubborn. Maybe the markets are sniffing out that cooling of inflation. But whatever you do,
look, the layoffs are big. We're starting to get real layoffs now. I mean.
But could we do under 200 on the? Someone sent in that they're looking at under 200 next year on the S&P. And then that's pretty frightening. I guess multiples could stay at 18 or 19.
No.
But
in order to keep the earnings up, they're going to fire a lot of people. I think that January is going to be a horrendous month in terms of firing. Doesn't mean it's going to be a horrendous month in terms of the S&P. I think that we overhired for really overhired for COVID and never really let these people go. And the enterprise software technology, 26% of the S&P is too high. But that's okay, because I think people, if they're being done with tech and they go elsewhere, it's actually good for the market. So I don't share Dave's negativity. I just don't.
Not as
much as I think Dave's great.
How about Micron?
Micron's terrible. Micron's problem is that Samsung is just a very irrational player. They've not cut back at all. And if they cut back, then I think you'd see something in 2023 would be good for Micron. But Micron told you that things are not good, and they have layoffs, and they are not able to make their numbers because the demand's weak. There's, again, what I think the central bank should be listening to, and the supply is overwhelming. So it's just not a good situation for a very good company.